Let's get more on Nvidia's report on the state of the AI trade. Stifel's Ruben joins us now. Ruben, great to have you with us here on set. What did you make of the quarter?
You know, within the context of all the moving parts going into the quarter, I really don't think it could have gone much better. I think Jensen and company, laid out the vision, laid out the plan for the rest of the year, and I think, things really went well. You had technical issues for Blackwell, you had the DeepSeek event, you had tariffs and all kinds of things, and then, the overarching theme of how long is this CapEx cycle going to happen, or how big can it get? And we went through December quarter earnings, and every hyperscaler raised their CapEx pretty much, right? Google went to $75 billion for the year, up from consensus expectations in the low 60s. So I think it went really well. Maybe a couple things we could nitpick on, margins and otherwise, but overall, I think it was a great quarter.
So why do you think the markets are so skeptical? I mean, I imagine that today was a very busy day for you. You spent all day talking to investors and clients, et cetera, about this slide into the close.
Yep.
How skeptical are people of the AI story at this point? Because it's obviously Nvidia didn't say anything. Jensen went full court press. He did the conference call, then he did a 20-minute interview on CNBC, and the stock still slid into the close today.
Yeah, I think I heard the term, shoot first, ask questions later, and I think there's a lot of jitters in the marketplace. I mean, kind of what's next? We've got this event. Probably, there is a little bit of a de-risking, which is great, but then what, right? So in our view, we've got a catalyst coming up in a few weeks' time. NVIDIA's going to have their big tech conference, GTC, which I think is going to be really interesting in terms of product roadmaps, technology, and otherwise. But, until then, what are we playing for, I guess, short term is sort of what's I think in the market today.
Well, Ruben, maybe we're just playing for a valuation argument that at some point says this is really attractive. I mean, relative to peers, and I would just say also help us understand within your coverage, especially in the semiconductor space. I mean, where would you rather be, given at least, and the concerns around AI are certainly not places that I think there's really almost anyone else that can even be in this game. So talk about valuation and talk about relative value to the peer group.
I mean, it was cheap this morning when we were pitching it to investors. And
even better. Got better.
We liked it this morning. We love it now. Down in the low 20s on next year's earnings, right? And numbers didn't move much, right? But, you have a ramp coming. We want to play for the Blackwell ramp. It just started. It's going better than we thought, but second half, bigger ramp potentially. So a stock that's trading in the low 20s on forward earnings with margins, people are kind of complaining about 71% gross margins. I've been covering semiconductors for 25 years. That's pretty good. And as you guys know, NVIDIA is not a chip company. It's a system, software, and solutions company. And I think margins are going to go back up into the mid-70s as Blackwell, continues to ramp throughout the year. And you've got, other things, networking coming back, software coming back, et cetera. So I think the stock's cheap. It's the best way to play AI compute. But yes, I think AI investment, it's a broader investment cycle. There's networking companies out there. There's a lot of other companies that are, I think, part of this, boats rising with all tides that NVIDIA really is driving. So we're still in kind of full-bore AI investment cycle.
So, Ruben, thanks for being here, first of all. I thought he spent a lot of time on the call trying to talk about inference as actually needing much more compute than we had originally thought. And so did you buy that, and how do you think that translates into the story?
Yeah, I do buy that. I am, and it's not just Jensen talking about it. We talk to supply chain folks. We talk to other users of, various methods of AI compute. But I think something that gets lost is, you need a lot of compute for training, and then we could do inference on our iPhones. I don't think it's that simple. I think the definition of inference across workloads is very wide. And, there are inference use cases that require massive amounts of compute. And the other thing that's happening, I think DeepSeek is showing this, is that the world's changing very quickly, right? When you get to post-training models and we get to, kind of distillation of other models and trying to figure out reasoning and otherwise, there's a lot of compute intensity. So that's what's going on. I think the world really hasn't figured it out yet. So when we talk about custom chips and custom solutions, I think NVIDIA's, kind of approach of a GPU, which by nature is quite flexible and programmable and, workload independent. I think there's a lot of merit to that as we, figure out where the workloads are going. I still think we're in the very early innings of, an overall AI investment cycle. And inference is, in our opinion, absolutely going to be a long tail investment cycle.